Good day, traders. Okay, now this is your actual trader. I want us to explore the extreme pattern, which is simply taking the trades at the extremes, that is on the previous daily high, on the previous daily low. I want us to explore that. Thank you for coming to my channel. Thank you for liking. Thank you for subscribing, and thank you for commenting. Good energies, good energies. Let's see how to take advantage of this extreme strategy. Simply a strategy, simply something that is out there. Some call it Wyckoff, some call it turtle soup, some call it stops being run. So there are various names for this particular strategy or this particular play, but I simply call it the Wyckoff. It's a Wyckoff scheme, it's a Wyckoff framework of looking at the market. You have sell climax, you just have to wait, give the market some time to play out, to accumulate, to distribute, or whatever you term it, and then take the trade using the turtle soup or using the Wyckoff again on lower time frames, or using Quasimodo. If you don't know what is the Quasimodo, go back to my previous videos again, or just Google it. Now this is what is happening here. All you have to do is just mark the previous daily high and the previous daily low. So as you can tell, this took place here. This is where it played out. Played out here. As you can tell, market before it moves, it has to reverse just a bit, even on this one, even on this one, which is the previous daily low. Maybe it crossed or it nicked it maybe by a pipette, and on this one again. So the market normally turns on these extreme levels, guys. So all you have to do is just wait for your time. So you cannot just trade this thing willy-nilly. That's number one. As you can tell, we don't have any context. I'm not giving you any context in terms of the fundamentals. I'm not giving any context in terms of the higher time frame. There is no order flow. There is no volume read. I'm just saying this is what I think this is what normally takes place on a daily basis. So if you want to take advantage of it, yes, please do. But I'm in no way saying this is always going to play out. And I don't think you need to be confident when you're trading such a system, because what happens is that if you don't factor in the higher time frame, your fundamentals, the economic reads, then you're going to have problems. And once again, we have to consider the sessions. Some of these things, they happen just outside of the good session. They can happen in Asia, and as you can tell, this is USD CHF. This pair only moves maybe roughly, it's more volatile in the US session. So, but in this case, let's see, let's consider this play. Suppose this is your daily low. Let's scratch this one out. Suppose this is a daily low, and then it nicks off the low of the previous day. So as soon as it nicks the low of the previous day, what you normally do, you just wait. As you can tell, first it gave a selling climax. Go back to your Wyckoff schematic video, and then it waited. It accumulated, maybe because of it waited for some particular news to come in before it moved. Maybe a rumor kicked in and the rumor wasn't confirmed. Maybe there was a big player who was just priming people to the wrong side. We don't know what was happening here, but it can only be confirmed when volume kicks in just under the previous daily low. And then maybe as soon as the volume kicks in, maybe there's a rumor that picks up, there's a sentiment that kicks in. There are players that are trapped. Always when the market takes the high of any side, someone is being trapped, someone is in a trade, some people are already in the trade, some are just entering. So there are various plays at any given swing low, swing highs. And no one knows the direction except the people who are driving the market. So us on the retail, we just need certain tools to confirm where the price is going. And that's why I highly like trading price. But at the same time, my confidence, the bulk of my confidence comes from understanding the fundamentals behind a currency of the pair. So if you consider all those contexts, then this is going to be easy for you to take such trades. I know they look scary because they are reversal, but they give nice R's, crazy R's. And not just crazy R's, we can compound when things are working in your favor. So let's see how it plays out. So I want to look at this one in actual fact. First, if this takes place outside of the session, outside of the London, the US, I wouldn't trade it, and I don't advise anyone to trade it. So let's see. So when does the London session? So this is probably in the US session. So since I have a GMT plus 1 broker time, my US session opens at 14:30 according to my broker, which is 15:30 in South African time, and to maybe 17:30. Only take trades in this interval, nothing outside of it. Let's see. So 14:30 is this 14:30. Okay, price is nicked just before the US session opens. Let's see if it plays out just in the interval before London closes. If you don't understand how sessions are being traded, I think there are too many videos about this. I think you need to just consult enough videos to understand what is happening here. At 16:30. 14 is 14, 15, 16, 16:30 South African time. There it is. So yeah, like I said, you need to consult the Quasimodo. So since this is a bearish setup, this is how it plays out right at the low. Suppose this is the low of the previous day. Suppose this is the previous day. What happens? Price gets nicked. It tests, takes out the previous, takes the low of the day, takes out the lower high, and then shebang. It tests or retests 0.2, which is your Quasimodo entry level, and there it is. So what we have is, what you normally do is, if you want to trade such a setup, what you do is we wait for 0.1, and then 0.1 can only be confirmed as soon as we reach 0.4, or as soon as we nick level 2. As soon as we nick the blue line, or we take out this higher low, this lower high. As soon as we nick the lower high, then it's confirmed that this is going to be a diamond or a Quasimodo level. So as soon as this is taken out, what you do is you place your sell, your buy limit here. Put your buy limit and let the market move in your favor. If it does move, then take advantage of that. And that is it. So yeah, since we're in the lower time frame, which is M5, price takes out this low, which is the previous daily high. And another thing to address is that you need to use alerts. If you are going to trade a level of this nature, particularly extreme level, use alerts, maybe 5 or 10 pips before the market reaches that level. Use an alert yourself. Set an alert. There are ways of setting alerts. If you use TradingView, then use the alerts from TradingView. Set up alerts. Let the market alert you that it's about to take out the previous daily low. And then now you can stock your price now. It becomes stock, you stock it. As soon as it nicks it, then you wait for your setup, which is your Quasimodo or diamond. If you don't see the Quasimodo diamond setup, then don't do anything. As soon as you see it, take the trade. Be it a loss, be it a win, just exercise the idea of taking your trades. Trade your ideas, plan your trade, and trade your plan, and that is it. So as soon as it gets nicked after the alert, it alerts you here, gets nicked, wait for a Quasimodo. This is 0.1, 2, 3. As soon as it gets nicked, be it a close, even if it does not close above 0.2, it's still a Quasimodo because the higher low is being taken or the lower high is being taken. So you need to partake in that environment. So it gets nicked. As soon as it gets nicked, then you place your buy limit in. put your buy limit here, and then what you do is put your stop here at 0.3. 1, 2, 3.3, put a stop, and then targets, let's go for 3. So as soon as the target is taken out, so as you can see, you got 3R, and then there it is. And this is a system to trade, because this is what we have. If you risk 2%, by risking 2%, this will yield 3 times the 2% you've risked, and your ultimate return is going to be 6%. So a risk reward of 3 gives you 6%. If you can manage to do these kind of trades, maybe 2 or 3 trades of this nature, because you're trading a lower time frame, and this is just for a single pair, it's quite possible to have 4 or 5 trades of this nature. You can have 5 trades, win 3, lose 2. So you know that's 5 minus 2, that's 3. That's 3 times 2 times 3. That's more than 10%. That's more than 15% on a weekly basis. If you have a good account, that's a good return. So yeah, let me know if you like the system, if you want to exploit, if you want the context behind it, because like I said, there is no context. This is just an entry. You don't place too much importance behind an entry system. You can enter anyway. It's all about how you manage your trade. It's all about how you compound it. It's all about the amount of risk you put in place, or you expose yourself to the market. So if you want to get in contact with me, go to Instagram, go to Twitter. You have my email. Then maybe we'll explore it further just by looking at the fundamentals, maybe, because there is no fundamental here. There is no order flow. There is no volume. There is nothing here. This is just an entry system. So if you want to explore it, guys, come to me. Let's discuss it further. I think I can hand you something that will help you, that will work in your advantage. Thank you.